Hello everyone, this is Stephen Primo. I want to thank you for attending today. I am the president and founder of SpecialistTrading.com, and I see a lot of names here of people that have attended my presentations in the past, but for those of you who have not and are new to our webinars, Specialist Trading is, in our opinion, your premier online source for education in trading the Forex markets as well as the stock and the E-mini markets. We provide you with the tools, the tips and techniques you need to empower yourself. I've been trading for 36 years. I started out on the floor of the stock exchange. I was a specialist down there where I made the markets in roughly about 50 stocks, and that's where we get the name Specialist Trading. But once I left the floor in the mid-90s, I began managing money and trading all different types of markets, from the futures to the Forex markets. And all of the things that I've learned in my 36 years of trading really transfer over extremely well, especially into the Forex market. So I really want to teach you how to trade with the Specialist Edge. So what we do at Specialist Trading is, once again, we empower you with all the things you're going to need to actually make the decisions for yourself. I know a lot of traders have difficulty, and they put a lot of emphasis on the right teacher and taking the signals from them and letting them do all the work. But then they still have problems when they see that their account isn't reaching what they want it to do, or else you start losing money. So what we want to do is put you in control so that you can make your own decisions and shorten your learning curve. I know a lot of people are struggling and they're trying to learn how to trade the Forex. Well, as I stated, I've been trading for 36 years, and hopefully all the information I can pass on to you will really shorten your curve so that you can really get on that road to consistency. Now, if you have attended my presentations in the past, you know that I like to give you something new each and every time I speak, something to use on your own. So what we're going to be doing today is completing our two-part series. We began last month with a powerful technique for capturing trending markets, and we're going to complete that series today because this is part 2 in completion of our two-part series. So this is a great technique that I personally use, and I'm going to show you exactly how to use it today with an entry technique. Okay, this is a powerful technique for capturing trending markets, part 2. Now, before we begin, I want to thank all the good people at FX Street for inviting me to speak and giving me the opportunity. They have so graciously set us up with a microsite where you can get more information about SpecialistTrading.com as well as myself. So here's the link, and we've shortened it for you. So if you want to go and explore and see exactly what we're all about, the bottom link that's been shortened or abbreviated in yellow is what you can copy down there. And here's what you'll find out once you click on that link. You see here we have a microsite about ProTrader Strategies. The ProTrader Strategies is our sister site, and what they do is they sell and they promote all of our individual strategies for the Forex markets. Once again, you can learn about my presentations, you can learn more about myself and our products available, but the most interesting part is because you are an attendee and you are a member of FX Street, we also offer special discounts for FXStreet.com users. So make sure you take advantage of that. Go explore, go to the microsite and get all the information you can. All right, now before we begin, just want to make an announcement. A couple of things we're required to show you this, our disclaimer. I'm going to show you a lot of performance results using this innovative technique that I'm going to share with you today. But please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. Okay, so as you're taking a moment to view our disclaimer once again, also, for those of you who have joined me in the past, you know that I like to take questions and answers, but I like to wait till the very end. So if you happen to see something that doesn't make sense or you don't really understand exactly how it goes, please write down your question or remember it if you can, and we'll spend the last 10 or 15 minutes taking any questions you may have. Okay? So once again, I'm not going to answer any questions during the presentation because it seems to slow down the presentation. We seem to get tied up by taking too many questions. So let's just write them down or remember them, and I promise I'll get to each and every one. As well, if you happen to come up with a question once we've concluded, don't worry, you don't have to wait till my next webinar to ask me the question. I'm going to leave you with a phone number as well as an email address where you can contact us with any questions you may have as well. Okay? So there's lots of ways to ask questions. Just kindly wait till the very end. All right, so let's begin now. As I stated, we are an educational company, though. Even though we provide our members with signals, when they're generated on a nightly basis, and we provide you with all the tools and techniques, we're not here to trade for you. I know too many educators and too many people rely too much on an outside source to give them their answers about what to do. in my opinion, after my 36 years of trading, that really is counterproductive for you becoming successful as a Forex trader. Because you rely too much on this outside source, whether it's an indicator or whether it's some teacher or whether it's some method, and you really take yourself out of the game. So what we want to do at Specialist Trading is get you into the game so that you make the decisions for yourself. This is what turned my way of trading around. I had a difficult time when I first started trading, and my mentors taught me to simplify things and to really rely more on what I'm seeing in the chart and the tips and techniques that they taught me. Once I started doing this, my trading turned around and I started to become consistent. So that's my goal, to teach you how to trade with the Specialist Edge, which is really rooted in simplicity. You'll see here how simple things are. When you forget about listening to things such as news and economic reports or all these trading gurus and really learn to listen to the market, you'll see how simple it is to really get consistent in your trading. All right, so here's what we covered in part one, which was my last presentation. I gave you two edges. All right, we talked about a proper setting for a very common tool, the RSI indicator. We talked about the proper way to use that. And then we showed you edge number two. The way it should be used is as a directional tool. Most people use the RSI, in our opinion, incorrectly. They use it for an overbought or oversold oscillator, and that's really a recipe for disaster, because ultimately you may win over a period of time picking tops and bottoms with any type of overbought, oversold tool, but ultimately it's going to be a recipe for disaster because you'll have those one or two trades where you give everything back. So we want to stay away from that. Remember, we're all about consistency and using simple things that work over time. Now, here's what you're going to learn today. We're going to give you an entry technique. So we've already given you all the information about edges 1 and 2, and we're going to give you an entry technique for using these proper settings and for using the RSI as a directional tool. But let's review. I know some of you may not have been to the last presentation and may not have the proper settings or learned how to use the RSI. So let's go over these really quickly. Now, remember, we're just going to review, so I'm not going to spend a lot of time. If you have any questions, write them down, and we'll get to them at the very end of the presentation, okay? But let's review what we went over in our last presentation. I'm going to show you some proper settings for the RSI. In our opinion, this is the right way to use the RSI. 99.9% of people use overbought, oversold indicators incorrectly. Once again, they're trying to use them to pick tops and bottoms. This is a recipe for disaster. So what I'm going to do is start out showing you the proper setting, and I'm going to show you some older charts, okay? The only reason I'm showing you older charts and all of this is so that we can really get a really visual understanding of how it works. Once you understand that, then by the end of the presentation, I'll show you some newer charts, some charts that are just a week old, so you can see how it works very recent times. But let's start out with a proper setting for the RSI. What you want to do is you want to edit the standard 14-period RSI setting to a 5-period. This simply means go into your edit box, whatever charting software you're using, and you'll edit the RSI. It's usually defaulted at 14. All we want to do is change the length or default period to 5, okay? Now, don't ask me to explain it or go into a long, explanation of what it is. We just want to make sure that 14 changes to 5. In other words, the indicator is, instead of going to look back 14 bars, it's only looking back 5 bars to come up with its calculation. That's it. So here's, once again, an older chart of the British pound, and as you see here, it has the standard 14-period RSI plotted on the bottom. Now, this is the way most people use this, and as you can see, there's not really much action with the overbought, oversold, thresholds. We're really kind of just in the middle, going nowhere. But once we change it to a 5-period, you see the same chart, but now the indicator has been changed to the proper setting. There's a lot more dynamic use in it, and you can see there's a lot more opportunity to use it in different ways. So change the 14 to 5 period. All right, now what we want to do is we want to edit the standard overbought, oversold thresholds to a 50 setting. In other words, you usually on an overbought, oversold oscillator, you have the overbought limit and the oversold limit. We don't care about those anymore. Remember, that's a recipe for disaster. I keep repeating that over and over. What we're concerned about is just having a midline. That should be set at 50. So here's the standard way the RSI is set with the overbought, oversold thresholds. We just want to get rid of those and have a midline which is set at 50. Okay. Now, some of your charting software isn't able to do that because it's they can't have an overbought, oversold. They can't take out those lines. That's okay as long as you have a midline at 50. That's all you need. Okay. All right. So now how do we want to use this? Now that we have the proper setting, what do? Well, we want to use the RSI not as an overbought, oversold tool, but as a directional tool. We wanted to use it as a trend tool to show us the trend. Most likely when a really strong trend is just about becoming underway here. So these are the directional tool rules, okay? Here's what you want. You may want to copy this down, or don't worry, we'll go over this later on. You'll see this, but it's very simple. You want to see, for an uptrend, you want to see price close above the 50-period simple moving average, okay? So that's the only tool you should have plotted on your screen, a 50-period simple moving average. Now the 5-period RSI must also cross above the 50 threshold, that median line that we just plotted on the 5-period RSI. All right, now what we want to see is a strong upward direction is likely. We're not saying guaranteed, but it's likely to happen as long as the 5-period RSI closes above the 50 threshold for a minimum of 5 bars. Okay, so price of the currency pair is above the 50-period simple moving average. And we also want to see the 5-period RSI close above the 50 threshold for a minimum of 5 bars. That's it. So let's go step by step. We'll go through this really quickly so we can get to part 2 of this. Step 1, you want to see the price of the currency pair close above the 50-period simple moving average. Remember, this can be in any time frame, in any direction. It doesn't matter if we're looking at a monthly chart or a daily chart. That's the beauty of this. Remember, we want to keep things as simple as possible. So we want to see price close above the 50-period simple moving average. As you can see here, here's an older chart of the Australian dollar. All right? And once again, first rule is we have price closing above the 50-period, which would be right here, roughly in this area. Step number 2, the 5-period RSI crosses above the 50 threshold, the median line. All right, so we see here that the RSI was below, it was above, then below. Now it crosses above once price is above, okay? And now, what's the last and final step? We want to see a strong upward direction, a probability, as long as the 5-period RSI closes above the 50 threshold for a minimum of 5 bars. Okay, so as you can see here, we label this as number 1. This is the first bar that the RSI went above, and we are above the 50-period simple moving average. So that's bar 1, 2, 3, 4, and 5. So we want to see 5 bars where the RSI is now above the median line, 50 line. And obviously we want to see that these prices have closed above the 50-period simple moving average, okay? So if these things are in place, most likely we're going to have a nice trend to the upside. You see how simple that is? We didn't have to worry about an economic report. We didn't have to worry about what someone was promoting in a trading room or a chat room. Remember, once you let go of these things and learn how to just listen to the market, you'll see how simple trading can be. Here's a weekly chart, an older chart of the euro dollar. Okay, it's a weekly chart. We see here that we have the RSI closes above the 50 threshold. We have 1, 2, 3, 4, 5 bars where the RSI remains above 50, and an uptrend is most likely there. Now this is on a weekly chart, so you had a really nice move there. Okay, about 1,200 pips or so. How about on a 4-hour chart? I know a lot of Forex traders like to trade the 4-hour charts. Okay, well, we see here that here's the 50 threshold. We crossed above. 1, 2, 3, 4, 5 closings above the 50-period simple moving average, as well as 5 closings above the 50 threshold. And on a 4-hour chart, we had a nice little run. Okay, it's all relative depending on which time frame you're looking at. All right, so let's go over real quickly and see how we can use this for downtrends. Remember, I know a lot of you may have come in late, but remember, I will only take questions at the very end. We will slow down the presentation if we answer questions while they're happening. I know some educators like to do that. I like to wait to the very end, so please hold your questions till the end. All right, so we're looking at a downtrend now. So we're just going to do the same thing, but turn it upside down. We want to see that price of the currency pair close below the 50-period simple moving average. Okay, so we want to see it now below. We also want to see the 5-period RSI cross below the 50 threshold or the median line. Once we have these two things in place, most likely, not guaranteed, but most likely, a strong downtrend direction is likely as long as the 5-period RSI now closes below its median line or the 50 threshold for a minimum of 5 bars. Okay, so let's look at this example in the Swiss franc. Remember, we're looking at older examples just so that you can see how this works. Then later on in the presentation, we'll show you some more current. So obviously, prices below the 50-period simple moving average. We cross below the 50 median line here for a total of 5 bars. Count it 1, 2, 3, 4, 5. Okay. Now at this point, some people would say, well, I went to a chat room or a trading room, and they said we have really good support here at this area right here. We're making a double bottom. This is a support level. Or maybe someone would say, well, no, there's some really good news going to be coming out economically, and this is a bottom. I want to be buying here. We don't concern ourselves with these outside sources. Remember, I used to trade like this, so I know firsthand when you overcomplicate your trading, you're really taking yourself out of the game because you're relying on something else to give you your answers. My mentors taught me they said, Steve, put 99.9% of your reliance on the market. If it's telling you by these nice little tips and nice little clues that it's going to go in a direction, just follow it rather than following an outside source. So according to this clue, we're most likely going to have a stronger trend to the downside of the Swiss franc. And as you can see, it went lower. We weren't trying to pick a bottom. We weren't listening to any economic reports. We just simply listened to the market. How about a weekly chart of the dollar-yen, an older chart? Once again, now we closed just below the 50 period, but that's okay. We closed just below it, maybe even on top of it, but a total of 5 bars. And the RSI was below the 50 line for a total of 5 consecutive closes. And we had a nice move to the downside in the weekly dollar-yen. A 4-hour chart of the euro-yen. Okay, obviously prices below the 50-period simple moving average. We're below, and then we cross back up, and then we cross below again. So we start the countdown. Once we cross below again in the 5-period RSI, we start the countdown 1, 2, 3, 4, 5, and finally the euro-yen started to head lower. All right, so that's just in a nutshell what we went over last presentation. All right, I spent more time on it, a good hour or so, but we kind of really went through it quickly because I want to go on to this entry technique. This is what we're going to talk about in part 2, because a lot of people said, well, Steve, this is great, but where do I enter? How do I get in? Well, remember, first thing I want to state is that this is an entry technique, but this is not a strategy. And I know I'll probably answer that question at the very end of the presentation, but please remember, this is not a full-fledged strategy. What we just showed you was a great tool for finding out, for discerning most likely where a nice trend is going to happen. Once you get a trend, the way we teach our students and members at Specialist Trading is that you should have some type of strategy, some structure to trade with the trend. But where most people lose is that they're usually going against the trend. They may have a strategy that works well, but they are out of sync with the trend because everyone has a different idea of what the trend is. You know, everyone has one person's uptrend can be another person's downtrend. So what we do is, according to our methods, teach you what the proper trend is, and then we provide you with sound strategies to trade within that trend. We never want to trade counter trend, and if we have a nice downward market, we don't want to look to go long or look to buy. And vice versa, if we have a nice uptrend, we're never looking to go short. We only go in sync. So what I'm going to show you now is not a strategy, but just an entry technique that you can build a strategy around using this really nice directional tool that we just shared with you. Okay, so here's our entry technique. All right, once you see that you have a nice move to the upside, once you see that everything has fallen into place where you have the 5 closings above the 50-period simple moving average as well as the 5 RSI closings above the 50 median line, once the 5-period RSI has closed above the threshold for a minimum of 5 bars, what you want to do is you want to buy when price trades 1 pip above the first short-term high. And people can say, well, Steve, what is a short-term high? Well, in a nutshell, very simply, a high is basically a pattern that looks like this. You have a high, followed by a higher high, followed by a lower high. It's kind of this kind of upside down V type of look. All right, so this is a short-term high. So what you want to do is, if everything is in place, once price travels up above this high point right here, that's where you're going to enter. That's our confirmation to get in. Okay. Now this is very a proper look and a proper example. Sometimes it won't be as in sync with this type of look, but basically this is what you're looking for. Once again, a high followed by another high, a higher high followed by a lower high. We have this kind of top formation. Okay. So that's what you're looking for once we have formulated this 5 bars where we've closed above for a minimum of 5 bars, this can either be within the 5 bar setup or after we've done it. But I'll show you some examples where you can see exactly how this works. Now we'll just do the opposite if we want to go short. Okay? Once the 5-period RSI has closed below the 50 threshold for a minimum of 5 bars, we are now going to sell when price trades 1 pip below the first short-term low. So we just turned everything upside down. We have a low, followed by a lower low, followed by a higher low. So this has this kind of V look to it. Okay? Once again, you can spot this short-term low or short-term high depending on what side of the market you're on, depending on where the trend is. It can either be within that 5-bar setup or it can be once that setup has been concluded. So I'll show you some examples so that you can really fully see how it works. But this is your key to either enter long or in this case to enter short. Once we traded 1 pip below this low, and as long as everything is still in place, that's where you're going to be entering to go short. All right, so let's look at an example here. This is the Australian dollar. Once again, we looked at this earlier. We have the 5 bars closing above the 50-period simple moving average as well as the 5 RSI bars above 50. Okay? So this is our setup. So we're looking for that little high, that little short-term high, and that's right here. We have a high followed by another high followed by a lower high. It's not as uniform as the examples I showed you, but this is something over time you'll learn to spot. So this is your first short-term high. Okay? So this is where, if you had structure, remember, if you had a strategy in place where you had stop placement, where you had exits, where you had money management in place, this is a good entry point. So this is where you'd enter. As long as everything continues to stay in place, you would enter once we traded at this point. And as you can see, there's your entry, and it's 600 pips to the upside. Okay? See how simple that is. Let's go on to the next example. Here's a weekly chart of the euro dollar. Once again, we have 5 closes above the 50 period, and we have 5 closes above the RSI midline. And as you see here, here's where our high was. Our high was in the setup, its actual setup. So that's our first short-term high. We have a high followed by a higher high followed by a lower high. Now, as long as all of these things are still in place, meaning that the currency pair's price closes above the 50 simple moving average, and as long as the 5-period RSI stays above the 50 median line, we just simply wait for it to go up there. Okay? In other words, if we saw price close below the moving average, or if we saw the RSI close below the 50 median line, then the trade would be negated. The entry would be negated. But as long as everything stays there, it doesn't matter how long. It can be another week, it can be another day, it can be anything. But you just have to have spotted this high, followed by a higher high, followed by a lower high. That's your top. And as you can see, you would have entered, and it's 900 pips to the upside. Let's look at that 4-hour Canadian chart, dollar Canadian chart here. Once again, we have 5 closes above the 50-period moving average. We have 5 closes in the 5-period RSI above the median line. And here's our first short-term high. We have a high, followed by a higher high, followed by just barely a lower high. But this is your top. Okay? That's your first short-term top. Remember, it does not matter how long we wait to enter as long as these rules are still in place. So on this, you didn't have to wait very long, and there was a quick 150 pips on a 4-hour chart. Do you see how this is working in any direction in any time frame? Here's a real nice setup in the Swiss franc, as we talked about earlier. We had 5 bars below the 50-period simple moving average. We also had 5 consecutive closes below the midline. All right. Once again, someone right here would say, well, Steve, this is support. This is where we should be looking to buy. Or in actuality, Steve, look at this is tremendously oversold in the RSI. This is where we should be looking to buy. Remember, this is the way 99.9% of all traders trade. They're going against the trend. Right now, the only thing you should be listening to, which is the Swiss franc chart, is telling you, trader, I'm going most likely lower. Just go with me. Just jump on board. Don't try to fight it. Don't try to discern what some news means, or don't try to listen to somebody in a trading room or some guy on a webinar. Just listen to me. All right. So we find out that we have a low followed by a lower low followed by a higher low. All right. And so that's our point of entry. As long as we are still below the 5, or I should say the 50 threshold, and we are still below the 50-period simple moving average, this is going to be our point of entry. And There it is, and so you have a quick 300 pips to the downside, just because you were in sync with the market and nothing else. How about that weekly chart of the dollar yen? We have 5 closes below the 50-period simple moving average. We have 5 closes below the median line. And here is our first low at the threshold. Low, followed by a lower low, followed by just ever so slightly low, and 600 pips on a weekly chart to the downside. Okay? Remember, once again, this is just an entry technique. I know a lot of you are saying right now, well, where do I place my stop? Well, where do I get out? This is not a strategy. This is just an entry technique that you can apply to your strategy once you learn how to use this directional or trend trading tool. Here's a 4-hour chart of the euro-yen. Okay, this was just last month in April. As you can see, we are below the 50-period simple moving average for a total of 5 bars closing, as well as the 5-period RSI below. And here's our first short-term low. We have a low here, followed by a lower low, followed by a higher low. So this is our point of entry, and 300 quick pips in the next 3 or 4 different bars. All right, so let's look at some recent entries, all right? We showed you some really nice examples here, but they were cherry-picked so you could understand how this process worked. I wanted to show you so that you really fully see in a visual basis here how this is applied and how you can start to learn it. Remember, we're an educational company. We're more about teaching you how to spot these things rather than telling you, this is the trade, here's where you go long, here's where you go short. Our goal is to teach you how to spot this. So you see how much attention I've given to detail so that you fully can see on your own how to spot things like this, because I want to empower you with all this information. I don't just want you to take signals blindly from myself. All right, so this is in Canadian dollars. It's about 2 or 3 months ago. Canadian dollar had a nice run up. A lot of people were surprised that it went up. They were saying, wait a minute, the economic news or the support and resistance line were counter to what had happened. We're not interested in that. We don't care. We only care about what the market is telling us. And right here in the middle of February, we were above the 50-period simple moving average, and we crossed above the median line for a total of 5 bars. Okay? So this is telling us in the middle of February that most likely Canadian dollar was going to have a very nice move to the upside. Okay? Nothing else, just the Canadian dollar itself. It was giving you a nice clue. So what we want to do now is look for some type of a short-term top, because that's going to be our point of entry. Well, here's the short-term top. We have a high, followed by a higher high, followed by a lower high. So as long as we're still above the 50-period simple moving average and the RSI still remains above the median line, we're going to wait and see if we get up to this point again. All right? Remember, if we close below the moving average, or if the RSI closed below the 50 median line, well then our entry is negated. We start the process all over again. As you can see, it never went below the 50 threshold, and we never closed below. 2 or 3 days later, we went to the entry point, and it was a quick 250 pips in the next couple of weeks. How about a 4-hour chart? Now you said, well, okay, well, Steve, I like to intraday trade. I don't usually look at daily bars. Well, let's look at the same currency pair, the Canadian dollar on a 4-hour chart. This was just at the end of April. This was just a couple of weeks ago. You see here that we had 5 consecutive closes below the 50-period moving average. At the same time, the RSI closed below the 50 threshold and had 5 consecutive closes. So this tells us, great, the market has given us a clue. Not guaranteed, but most likely we're going lower. So what do? If we want to enter using some structure, the only piece of the puzzle we have right now is our entry technique. So we look for a low, a short-term low. Here's a low, followed by a lower low, followed by a higher low. So you have that nice V pattern here. So this is going to be our point of entry as long as these rules stay in place. Okay? And as you can see, we did enter, ultimately, and it was a quick 130 pips to the downside. Same currency pair, we're just in a different time frame, but using the exact same rules. We're keeping things as simple as possible. We don't have to change because we're on a 4-hour chart as opposed to a weekly chart. How about a daily chart of the Australian dollar? Now, we showed this in last month's presentation, how many times people will be looking at daily bar charts and say, well, Steve, I've been waiting for a month for something to happen here, but we keep zigzagging back and forth. I don't get a total of 5 closings either above or below. Well, that's all right. If you have a big move, such as we had roughly about a month ago, you can go to an intraday chart. Here's an hourly chart on that day, I believe it was the 15th of April, where we had 5 consecutive closes below the 50-period simple moving average, and we had 5 consecutive closes below the median line in the RSI. So now the market is telling us that the Australian dollar is most likely going lower, so we look for a short-term low right here, low, followed by a lower low, followed by a higher low. So this is going to be our point of entry. You see how simple this is? I mean, there's nothing you have to listen to. There's no money you have to spend. You've already learned the technique. And once we finally got to that point, it was a quick 115 pips to the downside on an hourly chart. Here's a weekly chart of the dollar-yen. Now, this is going back further because we're looking at a longer time frame. But you will see these from time to time. You won't get as many of these setups as you would if you're looking at a tick chart or if you're looking at an hourly chart. But you'll still see them on weekly time frames, even on monthly. But because of the spreading out of the time frame, you're going to see less and less, but they're still valid. The same rules apply. We have 5 closes on the dollar-yen above the 50-period moving average. At the same time, the RSI crossed above, and we had 5 consecutive closes above the median line. So right now, in November, I should say, October, November, this was last year, mind you, last year, before any news came out, before anyone jumped on the bandwagon, the only thing you should have been listening to was the dollar-yen telling you on a weekly basis, get ready to have a nice rally because we're going to probably most likely have a nice uptrend. So what you would have done is look for a point of entry, which would be a short-term high. You have a high here, followed by a higher high, followed by a lower high. So if you were using this technique, you could have just used this as a confirmation that the trend is underway, or you could have applied a different strategy and just said, you know, once we trade above that short-term high, I'm going to use the strategy that I like to go long, but at least I'm not going to try and short the dollar-yen because I'm going to listen to the market. And the market's telling me we're most likely going to have a nice run up, which I'm sure you've seen. The dollar-yen has had a tremendous run up, all signaled and all given to you as a clue as early as last October and November. The beauty about this technique as well is that you can watch it all along the way as it goes up. In other words, there are more and more short-term highs formulated, and you can use these as entry points as well. So here was another short-term high. A lot of people would say, well, that's it. That's the top. I'm going to short it because it can't go any higher. Well, that's not true. If you would have used that, you could have entered there, and then there was another short-term top here. So you can follow it all along the way. Now here's a 1,000 tick bar chart. A lot of people say, boy, this works on tick bars. Yes, it does. Remember, any time frame, any direction. Here's a 1,000 tick bar chart of the euro dollar. This was just on the 9th, which was last Thursday. If we look here, we had 5 consecutive closes below the 50-period simple moving average on a 1,000 tick bar chart. And we had our first close below the 50 median line, and then we went for a total of 5 bars. So once we see that, on this short time frame, same rules apply. We look for a short-term low. We have a low here, followed by a lower low, followed by a higher low. So that's going to be our point of entry. And as you can see, you would have entered, and in the hours to come in that day, you would have made a nice quick 100 pips if you stayed in the whole time using some type of strategy. Now, I want you to watch because we have one formulating right now. We have one of these setups formulating right now. I'm sure you've all seen the Australian dollar, how it's been falling out of bed. Well, if we look at a current chart, I took this chart, a snapshot roughly about an hour ago. If you look at this, we are well below the 50-period simple moving average. As you can see, the Australian dollar has been falling out of bed since the end of April. Okay, we have 5 closes below, and we have the RSI closed 5 points below. So this is telling us that you really haven't seen anything yet. Most likely, there's going to be a stronger move to the downside in the Australian dollar. Okay? Because right now, just 2 days ago, we completed the 5th bar. So it's not guaranteed, but most likely there's going to be an even stronger move coming in the Australian dollar to the downside. So what you want to do, if you want to apply this entry technique, remember I would not suggest it, I would say to paper trade since you're just learning this, but once you see that the Australian dollar has formulated some type of short-term low, then you can see if it would go below that as long as all the rules are in place, and then the real downside move would begin. So what we have here are the makings of a short-term low. We have a low followed by a lower low. This is today. Now if tomorrow we rallied and created a higher low, Well, this would be your short-term bottom, I should say, roughly right here. And you would have to wait to see for that to be broken. If it never was broken and we started to rally back up and then price went above either the moving average or went back above 50, well, then everything is negated. But we have to stay below these two indicators in order for that entry technique to be valid. So I invite you all to watch the Australian dollar on a daily chart. Now, obviously, if you go to an hourly chart of the Australian dollar or a weekly chart, you're going to have totally different scenarios. But at Specialist Trading, we teach our members just to look at the chart you're viewing. In other words, don't look at a higher time frame to confirm what a lower time frame is doing. I know a lot of people swear by this technique, and I even have members and students of my own who use my strategies using this. But I personally have found no consistency with this type of technique. I don't use a higher time frame to tell me what the lower time frame what I should do. I just look at the one chart. Remember, I want to keep things simple. So I don't want to include a ton of charts. I don't want to include different time frames. I'm looking at the one thing in front of me, and that's the chart I'm trading. If I'm trading a daily chart, I'm getting all my signals from that. If I'm trading an hourly chart, I'm getting all my signals for that. I don't rely on an outside source, okay? All right, so let's recap. What did we talk about? Last week, or I should say last presentation, we gave you the two edges, the proper setting for the RSI, which is change it from a 14 to a 5 period. And then how to use the RSI as a directional tool, the 5 count, okay? 5 count either above or below the median line. And then today we showed you how to apply that for an entry technique, okay? We showed you look for either a short-term top or a short-term bottom in which to use some point for entering if you have some structure. But please remember, this was just an entry technique. In order to really trade, in order to really be involved with trading the markets, the Forex markets, or any market for that matter, you have to have structure. You have to have information including stop placement. Where are you going to exit? Are you going to just stay in and hope that it goes to some dollar amount? You have to have all these pieces of the puzzle in place. This was just one piece of the puzzle which I shared with you today. This was our entry technique. Now, points to remember. There will be frequent fits and starts. So a lot of times you'll be counting. You'll think, wow, this is great. I'm on bar number 4, either above or below. And then the 5th bar crosses either above or below the 5-period RSI and negates the whole setup. So there's going to be fits and starts depending on what type of time frame you are. Remember, but be sure to use the proper setting of the RSI. And as I just said, this is not a strategy. This is just one piece of the puzzle. Now, if I could just take a couple moments to let you know that this is what we do at Specialist Trading. We provide you with full-fledged strategies, strategies that have stood the test of time, and strategies that I personally use in my own trading. Everything I've showed you today, I use for my own personal trading. As you can see, we have courses in stock trading, E-mini trading, and Forex trading. Each course comes with upwards of 10 specific and different strategies fit for those markets. Now, if you decide to become a member of Specialist Trading, you'll continue to get detailed instruction. You see how much attention I give to detail, as I shared with you today in this free presentation. You get numerous Forex strategies, updates and signals. Even though we don't want you to depend on them, we give you updates and signals so that at least you know how to spot them, so that you can kind of use them as homework and you can see if you're in line with what we're projecting for the next day. I also provide you with weekly webinars, archive videos, and a lifetime membership so that you can always email me and ask me any questions you'd like. Now, I just want to share with you probably one of our most resilient strategies. That's strategy number 5. We will sell this course individually for all of the FX Street members. This course usually runs for $5.95. We reduced it down to $3.45 for a limited time only. This is just for FX Street members and for all the attendees today. Okay, this has produced over 130% gains in just 2 years. Okay, you get immediate online access and all the entries, exits, and stops, and 1 year of trade signal alerts, as well as my email address. Just to show you our latest signals we had in the using strategy number 5. You've seen the Australian dollar been going straight down for the past couple of weeks. Well, the first week of May, on May 5th, we issued a sell alert to all of our members to go short. And they made a nice 300 pips in that particular short trade. We also issued a buy signal on the 2nd of May to go long the dollar yen. And you can see here 325 pips in that particular trade had you stayed in and used the aggressive methods. So this is a great method. It's probably one of our most consistent and resilient methods we have. Once again, over 130% gains, real world gains in just 2 years alone. If you have any questions about that actual strategy, once again, you want to learn more, once again, here's the link for the microsite that FX Street has provided for us. As you see in yellow, we've abbreviated it so that you don't have to copy down everything in blue. So this is where you want to copy down. I'll give you a second to copy that down, or you can go on the fxstreet.com site, and I'm sure it's there available. But what you want to do is simply click on the link as seen here on the bottom in yellow, and that will take you to our microsite where you get all the information you want. Remember, we have special offers for FX Street users where you can get up to $500 off in some of our strategies. All right, thank you so much for waiting. We are at the end of the presentation, the portion I promised you where you can ask any questions. Remember, if you have any questions about our individual strategies, please go to protraderstrategies.com. That's the link I just showed you a little bit ago where you can see any of the individual strategies. If you have any questions, say you have a question once we've concluded today, you can ask our VP of Operations, that's Brett Marsh, at brettm@specialisttrading.com, or you can give us a call at area code 310-844-7220. I'm going to open up the question and answer box here just so I can see what you may have been asking. And once again, any questions you have, please do not hesitate to ask right now. Let me just go to the beginning. Someone says from MRC, Mr. C, sorry, what is your RSI setting? The RSI setting is a 5-period. All we want to do is simply change it from a 14 to a 5-period setting. So I hope that answers your question. Also, Bob asks, can the 5-period RSI be used for any time frame? Yes, that's the beauty of this. As you just saw, I used it on a tick chart, I used it on an hourly chart, a monthly chart, a weekly chart. So that's the beauty of it. Remember, we're keeping things as simple as possible. We don't want to change simply because we go to a different time frame. Okay? Let me see here. When and how to identify current trend is getting over? Okay, that's a very good question. So what they're saying is, how do you identify when a current trend is ending? Well, we have certain ways to do that. I've talked about some other things in other presentations, but basically, we have probably about 7 different stop placements where you're basically just tracking the market. And you can apply any one of these, either aggressively or conservatively, so that if you want to be in the market and say you have a short trade, it keeps going lower and lower, but then the trend is ending, well, then you'll be stopped out with a nice gain. So really, we just let the market tell us through our proprietary stop placement, which stops us out. And this is all taught in our courses and all different ways in which to use it. But we don't try to project when the trend is coming to an end. We basically are in the trade, and we're either going to get out with a fixed exit, or we're going to track the trade, and then the market will take us out. Once the market takes us out and we exit with a gain, most likely that trend is done then, because we try and stay with the trend as long as possible. I hope that answers your question. JP asks, do we wait for 7 days to enter in the daily? No. Remember, there's no waiting. That's all you have to do is spot that short-term high if you're going long. And then as long as all the indicators are still in place, in other words, as long as the price is above the 50-period simple moving average and the RSI is above its median line, you can wait for 7 days, you can wait for a day, you can wait for a month until you get above that short-term high. So we're not concerned, once again, with how long we're waiting. We're just concerned that as long as all the setup is still valid and we finally trade 1 pip above that short-term high if we're going long, 1 pip below that short-term low if we're going short. Okay? Hope that answers your question. Another question is, does it apply to lower time frames as well? Yes, I thank you for asking that. We went over that and showed you some examples. Yes, it does. You can use it on 5-minute charts, 1-minute chart, but the smaller time frame, you're going to get a lot more signals and you're going to get whipsawed more because of the way the Forex markets work. There's a lot of movement back and forth, and you may get whipsawed. So I wouldn't say that it works just as well. If you're using a smaller time frame, I would most likely use tick charts as opposed to minute charts. Okay, only because you'll get a nice, more smoother type of trends as opposed to the whipsaw that goes back and forth with minute charts. Okay. Using the lower time frames lower the accuracy of the system. It is better in the daily, 4th or 1 hour. Yes, that's kind of just what I just mentioned. It's pretty much is better. I would say the lowest time frame you want to use it on would maybe be a half an hour or an hour chart. Okay, then you can go to 4-hour charts. You can use it on a 10-minute chart, but as I stated, the accuracy won't be as much. But remember, from Gabriel, this is not a system. You just said, will it lower the accuracy of the system? This is neither a system nor a strategy. I just gave you an entry technique on to this nice directional tool. Okay, a directional tool or a trend tool is not a system or a strategy. A entry technique is not a system or a strategy. In order to have a system or strategy, you need to know about money management. You need to know about not only entries but stop placement, as well as how to track the trade. So this is what we teach at Specialist Trading. We provide you with all these things. But I just gave you a few pieces of the puzzle today. Okay, so remember, I don't want you to think that what I gave you today is a trading strategy. It is not, nor a trading system. They're just techniques for finding the trend and techniques for entering once you have located the trend. But as I stated, the reason why most traders lose is because they're out of sync with the trend. You're trying to buy when the actual trend is much lower, going lower, and you're trying to sell when the trend is going higher. And why do we do this? Why do we buck the trend? Because conventional wisdom has taught us that that's the way you make money. That's the way, we go to these trading rooms and chat rooms, or we read these books, or we find these indicators, and they tell us this is our support and resistance. In my 36 years, I found that most of this stuff is untrue. So what you want to do is just simply go with the trend and let go of all these things you've been listening to. Okay? I gave you a ton of free information today because I really feel that this is going to help you. You see the sincerity in when I teach people that each presentation I like to give you something for free so that you'll learn, so that you can ultimately do it on your own instead of relying on outside sources. Okay? All right, so let's see. I think Boyke was asking which number is best for Forex traders. In other words, if you mean which strategy number, I would just say in our opinion, just because of the results, strategy number 5 is our best strategy for trading the Forex markets. Okay, it can be used in any time frame, but the results we have are for the daily signals which we issue to our members. And it's just a really resilient strategy. You saw the 2 trades there we had just a couple of weeks ago, going short the Australian dollar as well as going long the dollar yen. Those are actual signals that we issue to all of our members. So that would be the one I would most likely use over any other strategy we have at this point. And once again, that's on sale. Just the 2 trades alone, had you taken those 2 trades that I showed you the snapshots of, you could have purchased strategy number 5 with your FX Street discount probably about 10 times over. It's tremendously discounted at $345, I believe. So it's really a steal picking it up at that inexpensive price. Leslie asked, what is the name of my book? Well, the name of my book is Secrets of a Stock Exchange Specialist, but thank you for asking, but we only provide the book for people who are, we're changing, because we've had such a run on that, and there's so many interested members, new members now. We're only providing the book for people who purchase the course. So if you purchase the course, you get the book, but we don't sell the book individually anymore. Okay, thanks for bringing that up, because we just started that rule because we have so many members now, and we don't want to just give it to people who purchase it individually. It's now the book is only for people that are members of the courses. Okay, Gabriel Jose is asking, and if you open a trade in the 4th, for example, your magnet is on the 4th, or can you have the next signal in the lower time frame? Well, once again, I don't look at lower time frames. This is where you start to make your trading more complicated. I have not found any consistency in that type of trading. I used to try and trade that way, but over a time I found out that it kept me out of a lot of trades. I would wait for the smaller time frame to confirm, and I totally missed a signal. So over time I said, why am I waiting for a confirmation on a lower time frame or the higher time frame? I just simply trade the time frame I'm looking at. If I'm looking at a daily bar, I only take my signals from a daily bar. I don't look at another time frame. Okay, that's what we teach at Specialist Trading. Once again, you see how simple it. Once you do that, you see how simpler you've already made your trading. You don't have to rely on another source. So Boyke asks, which strategy is to purchase is best for Forex? Yes, I went over that already. Strategy number 5, I would say. Conor Pierre is asking, so more importance to trend than support and resistance? Yes, I would say there is so much more validity in trading with the trend than in trying to find out and discern where support and resistance is. The reason is because support and resistance can get subjective. Okay? All right. One man's support is another trader's resistance. And I know there are a lot of good traders, a lot of good educators that teach how to find support and resistance, but support and resistance will work until it doesn't work. Okay? I'm going to buy here because here's support. Well, it went lower. Well, I guess the support didn't work. See, we want things that are more cut and dry. Usually when you're buying on support, you're basically trying to pick a bottom, or you're selling on resistance, you're trying to pick a top. And as I stated repeatedly, that's a recipe for disaster. I know firsthand, I'm not speaking because I'm trying to talk down anyone, I know firsthand because this is the way I used to trade. And I had a very difficult time. So if you're having a difficult time trading that way, I know exactly what you're going through. I went through the same thing myself. It's very discouraging when you see all these people talking, or books, or people on TV saying what the support and resistance is, and then you try it and it doesn't work. So it's much easier just to go in sync with the market and learn how to trade with it, and then just basically go on board. Think of a river. If the market is a river, if the currency pair is a river, what would you rather do? Swim with the current at your back or swim upstream? It's much easier to go down the river with the current at your back. And that's what we're trying to teach at Specialist Trading. Much easier and 10 times more simpler to find out. Okay? We have time for just a few more questions here. You're very welcome, Elma, for the kind words on the webinar. Will you have time to apply the strategy on swing trades as I have a day job? Yes, you can. I mean, this works. Our strategy number 5 is basically built for swing trades. If any of you who are members of Specialist Trading, you'll see how well it works with swing trading. Yes, and that's the beauty of it. When you look at daily bars, we teach you where to enter, where to place your stop, and your exit point if you want to just get out at a specified exit, and then you can walk away. You don't have to be glued in front of your computer all the time. So yes, there's lots of ways to trade it if you're not able to be home trading all the time. I mean, I totally understand that. Okay. Time for one more question here. How many setups do you get a month on average? Well, it depends, Gabriel, on which strategy you're using, and it all depends on which time frame. If you're looking at daily bars, we usually get roughly about 2 or 3 setups and trades a week. If you're looking at intraday bars, you can get about 5 or 10. You can get 5 or 10 a day. So on a daily bar with strategy number 5, roughly about 2 or 3. But remember, this is not guaranteed. It all depends on what's going on in the market. We're never going to try and tell the market what to do and create a signal because we want more action. Or we're never going to try and stop trading because we're too busy. We're just going to take each signal for when it comes. So we have some very nice signals, as you just saw there. It all depends on the volatility and the action of the market. But that's a good thing. When things dry up, as they do so many times in the currency pairs, our strategies keep you out. So you may go for days, if not weeks, without a signal because if you did, you'd most likely be getting whipsawed. We try to keep you out of that. So this is the beauty of our strategies. We're looking for trend, and if there is no trend, you're not going to get a signal, which is very good because mostly, if you've seen, many of the times traders lose because there's no trend in place and you're getting whipsawed. It's just going up and down in a tight range, and that's not really conducive to positive trading. Okay? In closing, I just want to say, I hope you enjoyed today's presentation. I want to thank all the people at FX Street for giving me the opportunity to speak these past few years. Once again, if you have any questions, email our VP of Operations, Brett Marsh, at specialisttrading.com, or call us directly at 310-844-7220. Thank you so much. Look forward to seeing you next month in a totally different webinar where I'll give you more tips and techniques. But more importantly, I look forward to taking advantage of that great special for strategy number 5, which is only going to run for a limited time only, and for all of you becoming members of Specialist Trading. Look forward to you becoming one of my students. I look forward to teaching you, and I'll see you all next month. Thanks a lot. Bye-bye.